January 30th, the last day of the month, the last day of the week. There's no question about it in anybody's mind that what we saw was a coordinated and inclusive bear raid by the commercial traders, the banks and the hedge funds and the commodity trading houses, and they just all got together and said, we're going to hammer the price into the dirt. Because, we've had a parabolic price rise, and, some of that was short covering, and some of that was new momentum traders coming in, seeing a parabolic rise and trying to cash in on it. So once silver broke above 120 and gold broke above 5,600 or whatever the heck it was, they just put the hammer down, and we saw the results of that over the next 2 or 3 days. So there was nothing free market about this. This was the commercial traders trying to put a pin in this parabolic price rise, and they got their wish. And like we were talking off air, if you're looking for an entry point to buy into the precious metals rally, which is still ongoing, there was never a more perfect time than what we got last week and early this week as well.
On January 30th, market volatility shook precious metals as silver and gold prices reversed sharply after a parabolic rally. According to Ed Steer, the sudden decline appeared to be a coordinated bear raid led by commercial traders, major banks, hedge funds, and commodity houses. After silver broke above $120 and gold surged past $5,600, heavy selling pressure quickly crushed momentum. Steer argues the move reflected strategic price suppression rather than free market forces. Despite the pullback, analysts believe the broader precious metals rally remains intact, offering investors a potential entry point during temporary weakness in silver and gold markets. Now, we present the clips from Ed Steer's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
So, as we discussed off air, they're suppressing the price of the silver shares, and have been for many months now. I looked at what the miners were returning year to date versus what, say, something like PSLV was returning year to date, and the physical ETF was outperforming the metal, or outperforming the shares. So I bought a decent chunk of PSLV, and if you look at the price today, PSLV finished up over 4%, and SILJ, which is one of the stocks that everybody watches, it only finished up 2.36%, and silver itself is up 4% on the day. So, as we were discussing earlier, the silver stocks and the gold stocks should be selling for multiples of what they are today, 2 or 3 times, especially the silver stocks. And they're trading at less than 1-to-1 right now. Like I said, the silver is up 4% today, and SILJ was up 2.36%. And you could see from the charts this morning, and it didn't matter which silver chart you looked at. They all opened up down big. Okay. So, somebody came in and sold a boatload of shares in every single solitary stock. And, what happened is this, and I commented on it at the time, and I've commented on it before, is when we see these big price smashdowns, especially the one we saw at the end of January, is everybody that pukes up the shares of whatever mining company across the board from A to Z, okay? They're on margin, they have to sell or forced to sell, or people just, trying to take profits before they turn into losses. All of a sudden, there's this massive exodus out of the precious metals equities. And I commented several times, who's buying these shares that are being sold in the panic? Is it the guys with the white hats, like ordinary investors, or is it the guys with the black hats? The same guys that are suppressing the price. They scoop up billions of dollars worth of shares, and then they sit on them and wait until there's a rally that's going to start. Like we got the jobs numbers, the non-farm payroll number this morning, and it was, silver was up like 4% or 5%. And what they did is they took all these shares they bought on that big downdraft on January 30th and the following Monday, and dumped a whole boatload of them in the market. So that the shares started in a big hole this morning, and they had to dig their way out of it. It was obvious. There isn't anybody that wasn't affected by that. It was entirely across the board, and I'm not picking on them, but some of these miners barely closed up on the day. Let me just take a look at the list here. First Majestic Silver, which is the most levered company to the silver price, on a 4% up day in silver, only closed up 0.08%. So you know that they were smashed. And Coeur d'Alene was the same. It was across the board. The silver stock should have been up like 8, 10, double digits across the board. And we've had several days since we had that price smash where the stock should have been up double digits, and they just basically sat there. So, they're not only intervening in the price of the shares. Of the silver, but they're also intervening in the price of the shares in both the silver stocks and the gold stocks. And I sent you that chart of SILJ, SIL and the silver price, and you could see that from the middle of September, they've really, really been leaning on the silver shares, and they've been underperforming badly. So, this is a massive intervention by the powers that be across the entire spectrum, not just in the physical market, but in the shares as well.
Silver mining stocks are significantly underperforming despite strong moves in physical silver and ETFs like Sprott Physical Silver Trust. While silver recently gained 4% in a single session, SILJ rose just 2.36%, and First Majestic Silver barely moved. Analysts point to heavy selling pressure and possible market intervention suppressing silver equities. Since mid-September, charts comparing SIL and silver prices show persistent underperformance in mining shares. Panic selling during late January's sharp downdraft may have allowed institutional players to accumulate positions before dumping shares into rallies. Investors are now questioning whether silver stocks are being systematically capped despite bullish fundamentals. Let's get back to the interview.
Well, the thing is, if you got mining stocks going up like 8, 9, 10, 12, 15, double digits, 3 days a week or whatever, especially during this big parabolic price rise, people are going to look at their Tesla stocks and say, or whatever, Bitcoin or whatever, they're going to say, look, my goodness sakes alive, I'm going to take I'm going to take a few $1 million out of here and throw it in the silver miners or the gold miners or whatever. And of course, that just feeds on itself because, the precious metals market is so tiny. So they're desperately trying to keep everybody in paper, whether it be the bond market or in general stock market, and keep them out of the precious metals, whether it be by the physical itself or by the shares. Like you said, what's the reason behind this? They're just trying to keep this paper financial monetary system, the fiat currency system that we have today, especially in the West. They're trying to keep everybody on the paper side of the street, and this is all-out war, whether it be in the stocks or in the metal itself. But it's only being partially successful. But as you said, it's not doing the miners any good. They need the prices to go out to get more and more people invested. They are rising, but as you said, from the middle of September until very recently, they've been hammering the shares into the dirt. I report the Shanghai and Futures Exchange and the Shanghai Gold Exchange silver inventory levels in my column every day, and right now they're the lowest they've been since the third quarter of 2015. They're almost at rock bottom. I can't remember exactly how many tons or millions of ounces they got, but it's incredible how little silver they actually have there, at least that they're reporting that you can see. So, there's various export licenses for China to export silver. And, if this is any indication of how much silver they got left, they could restrict those licenses or pull them entirely. And one of these days we could find ourselves in a situation where, China is just not prepared to provide silver to except as very closest friends or to the LBMA to keep it afloat. So, the silver inventories in the Far East are something I'm definitely looking at. And there's no question about it. They know exactly what's going on in the precious metals market, and they could end this thing any time. So are they involved? I would say yes, but they really haven't put their foot down, like I said, with either announcing what their true gold reserves are, which most people believe are far in excess of what they're reporting, And they're also not and they're also running their silver inventories that are visible to the world. Everybody's talking about it. Everybody knows what's going on. And it's just a matter of sitting here. Is China actually going to do anything? Okay. How low are they going to let the silver inventories go? Because I mean, zero is the absolute minimum, of course. And we're at the point now where, you know, if they keep this up for another couple of weeks, you know, they're going to end up at zero. But I just can't see that happening. We've got the Chinese New Year coming up, starting on Saturday, and the markets are going to be closed in China for, I don't know, is it 8 or 9 days, 10 days straight, and they don't come back until I think the 23rd of February. So while they're shut down, who knows what's going to happen? But you know, the silver market is coming to a head. Everybody knows that we're in the 6th year of a structural deficit. The Silver Institute had a report out about that yesterday. That was in my column this morning, and they keep waving the red flag. And Phil Baker of the past CEO of Hecla Mining and the former president of the Silver Institute, who I met in Vancouver at the Vancouver Resource Investment Conference 2 weeks ago, speaks of rapacious silver demand. And it is just absolutely unrelenting. And if you want to talk about it, I'll mention not just what's the bleeding of the stocks in China, but it's going on everywhere, absolutely everywhere. Whether it be in New York or in Europe or wherever, the silver, there's this giant sucking sound of all this physical silver just disappearing into who knows where.
Silver mining stocks have lagged despite a parabolic rise in precious metals, raising concerns about market intervention aimed at protecting the fiat financial system. Analysts argue capital is being steered toward paper assets like tech stocks and bonds instead of gold and silver equities. Meanwhile, silver inventories on the Shanghai Futures Exchange and Shanghai Gold Exchange have fallen to their lowest levels since 2015, signaling tightening physical supply. With China controlling export licenses and global markets facing a 6th consecutive structural silver deficit, demand remains relentless. Investors are closely watching Far East inventories as the silver market approaches a critical turning point. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.